Up on screen's a graph of the Dow Jones, and as we expected, we had a 2-day bounce and then the selling resumed. The Dow closed back on the prior lows of around just under 24,000 points. And you can see there that it's closed on the session lows. Our expectation is for the market to come back to around 22,000 points. And the logic behind that is that if you apply about a 16 times multiple to roughly $150 of earnings per share for the S&P 500, the market should have a target range to the downside of about another 10% lower, which would put the Dow back at around 2,200 points. So we'll see what happens over the next tonight and into next week, and we'll continue to monitor that. I think the catalyst for where the market ultimately finds buying support will be stabilization in the outlook for bond rate rises. And currently, if you think about it in the context that the market's been pricing in for rate rises for this year, and we're slowly starting to see the fourth rate rise, the probability come down from 75% a few weeks back down to around 40%, and the third rate rise is now sitting at around 75% chance. What the market will be looking for, we feel, is that those third and fourth rate rises to start, the probability of those to be back down to probably where the fourth rate rise is unexpected, and maybe the third rate rise only has a 50% chance. A 50 basis point, which is 2 rate rises, if the Fed continues with their 25 basis point increase for the course of 2018, is about what the market would be comfortable, I think, sort of digesting. So we'll keep an eye on that. And if you have a look at the commentary that we provide on the blog today around the bond market, the US dollar, and the impact that it has also on the Australian dollar and our Yank trade, it ties into that thesis that that we're working around as to where fair valuation sits. Let's have a look at a couple of instruments that we're using at the moment to profit from the market falling. The B-bus. This is one I've been drawing your attention to over the last week or two. So if we go back to the 29th of January, it's trading around $4.50. With the Dow sitting back at around 24,000 points, the B-bus, which is an actual instrument over the S&P 500, but it's now trading around this 560, 570 level. If we get the next leg down in the Dow, like I was just illustrating, we'd expect to see the B-bus maybe up at around 625, 650. We think that's an area that you look to take profit in it. On the Aussie market, the B-BOS is the equivalent, which is the double ETF or double short on the XJO. So if we go back to January, it was trading around 1450. It's now 1667. With the Dow off 10%, maybe the XJO trades down to 5,600 points, 5,500 points. Don't see it too much below that. B-BOS would find resistance up here at around $17.50. The Yank position, which is the short position on the Aussie dollar, continues to trend higher. So it made a low on the 29th of January at around $12 now, trading $13.19. And we look for that to maybe push up closer towards that sort of $13.50 to $14 range as the US equity market moves lower. Newcrest Mining was a stock that we commented on the blog yesterday. It sits in our model portfolio. We find support here at around this 2150 level, and we're just starting to see buying come into the gold names today. An alternative to Newcrest is GDX, which is an ETF, which gives you exposure to broad-based global gold miners. So you can see that they're finding support at around $28. We had the algo buy signal at around 28.20 on that one. So keep that on your watch list. A couple of stocks that I think have delivered great earnings results recently. I see them as fairly defensive businesses, and you want to maybe keep these on your watch list because the sell-off in the market presents a buying opportunity in these names. ResMed's one of those, so somewhere between this $11.50 and say $11 range down here will turn out to be a good buying opportunity for ResMed. CIMIC Group, I think keep this one on your watch list. So let's assume that we get further selling in the US tonight, maybe Monday. That'll be the time to start to have a look at buying these names on Monday, Tuesday next week. CIMIC Group at around $45, I think is good value. You may recall that the last year CIMIC acquired UGL, and I think in general the theme of infrastructure demand continues to support the thematic there behind future earnings growth for CIMIC Group. And maybe the risk to the downside in a weak market is, say, $40, but between sort of that old resistance there at $40 and where we're trading 45, I think it's a buying opportunity. You want to watch that one. I think Medibank Private, we feel this one's getting a little bit oversold at the moment, and this is one that you should keep on your watch list as well, maybe for an entry level around this $2.90 area. In the model portfolio, we'll just have a look at a couple of changes that we've had. CBA, interestingly, we had a buy signal on this yesterday. The concern here with CBA is it's from a longer term structure, it appears still bearish that it's making lower lows and lower highs. The reason why the algo signals pick this up is we've started to see the higher highs, higher lows here from a shorter term perspective just across the last 6 months or so. So if we go to the momentum indicators, the short-term momentum indicators down the bottom here, you can see that they're still negative. So it's probably not until we start to see this cross back above that would really want to look at that from the long side. But being a completely automated model, we now see CBA added back into the top 20 portfolio. So we have an entry date there of yesterday, and likewise that now sits in the top 50 model. Let's try that again. There's the top 20 model, we have it in there. And the top 50 model, it's also been added in there. To finish off, and so CBA has been added. The other one that's also been added is Westfield, so I'll just have a quick look at that. Westfield's been added on the 7th at around this sort of $8.75 level, and I think that this starts to find support here, and we've been commenting on this one on the blog and adding it into client portfolios. If we look at the stocks that recently have been removed from the model, which is always interesting just to go back and have a look at the performance of these, Orica was removed on this lower high pattern here. So as the stock price rolled over, made lower low, rallied back, made lower high, that was removed from the portfolio, and we did very well out of Orica. It was a successful trade. I think the total return was a little over 12% on an annualized basis. And the other one that was removed at the end of last year was Suncorp, and if we have a look at how that's performed after the lower high formation there, so it was removed at around $4.30, and the stock's now $1.30 or so lower. So the concept behind the algorithm model is working very well, and we see that reflected in the terrific returns in the stocks that we're holding in the model portfolio at the moment. To conclude today, we'll just jump in and just go quickly through the top 20 stocks and just see some of the trends that are emerging. So Transurban, as these chances of those third and fourth rate rises are reduced, we expect buying interest to start to build in the yield sensitive names. So keep an eye on that over, especially into the middle part of next week. Telstra, we like this name and feel that it's a turnaround story, albeit that we're still in a lower high structure there, and we had the algo sell signal, but it's probable that Telstra starts to gradually move higher, and we look for the higher low formation there. Westpac, I spoke on that yesterday, testing sort of the lower bound of that algo buy signal, as is Wesfarmers after disappointing the market with the write-offs in the UK hardware. Westfield, we've spoken about that one being a buy and it added to the portfolio. Woolworths coming into the upcoming earnings result. Now, the way I look at Woolworths is I think they'll deliver maybe 8% earnings growth with a stock here that's trading on about 3.75% dividend yield. So it should be a calm port within the storm. So I expect Woolworths to mostly move sideways. Woodside Petroleum, keep this on your watch list. Somewhere between $30 and $31, I think, finds support there for Woodside. AMP, the market was quite pleased with the earnings results there with AMP, but we don't see that doing anything to the upside, sort of given that backdrop of the market that we still see as negative over the short term. ANZ Bank, we've commented. BHP, so back down to around $27 is the buy point there on BHP. Brambles is holding up well. We look forward to a positive outlook from the company in the upcoming earnings results. CBA has been added to the model. CSL, we look for this to maybe come back and test lower levels next week, but ultimately that'll be a buy at around sort of 130, 135. Insurance Australia is holding up well, so we like this name as a buy, right, owning it here and selling the 750 covered calls. Macquarie, I think with the view on the market, we feel that Macquarie probably rolls over, and we're a little bit cautious on that. NAB seems to, out of all the banks, there's money flowing into NAB disproportionately to the other names, which is interesting. So they had their trading update yesterday, and portfolio managers, fund managers, I think, are starting to rebalance their allocation to the banks, and they're viewing NAB maybe a little more favourably than the other three names. QBE, not doing there at present. Rio, a lot of analysts view Rio as a more positive opportunity over BHP. Our feeling on that is that probably the energy portfolio with BHP still has some value that's yet to be unlocked. So BHP at $27.50, Rio at around $70 are our targets there. Scentre Group, this is a yield-sensitive name, so it's dependent on that third and fourth rate rise starting to be reduced in order for Scentre Group to find support. Trades on about a 5.5% yield. Suncorp, we've always been a bit cautious on Suncorp's banking division. Their insurance margins have fallen a little over the last 12 months, and for that reason, you've got this bearish structure, and the stock was removed from the model a little while ago and then back to Transurban. Thank you for listening in, and certainly over the next 2 or 3 trading sessions, we'll continue to revisit this B-bus position and watch how that behaves and responds to what is likely to be a further selling pressure in the US market. So just going back to that Dow, so here we are here at around 24,000 points. We're thinking that maybe we see this sort of 2,200 level in the next sort of 4 or 5 trading sessions. Thank you for listening in.